Well, I was no doubt when I visited Brussels last year and spoke to Nellie Crowes, the Competition Commissioner, that she was going to do something purposeful about these banks. And if you look at the United Kingdom, we have about 6 banks in the United Kingdom, the big 4, Nationwide and Banco Santander, and that's all we have. And it's obvious that there's insufficient competition in the high street, and we need to get that competition, but we need to ensure the type of banks that we produce are what has been described as boring banks. They do the current accounts, and they do the savings accounts, they do the loans for businesses and for households, and they perform the everyday tasks which ordinary banks should be performing, not into the exciting casino-type banking. We need competition at the retail level, because I do not think that customers have been treated as fairly as they should be in the banking sector. Why do I say that? Because my post bag every week and my emails tell me that that's the case.
If we're going to have these healthy, boring banks, they have to be healthy. You know, the CEO of RBS, for example, thought until very recently the insurance businesses were going to be an integral part of his future, but now it seems that he's not going to have those businesses to play with. Are you sure that Lloyds and RBS are healthy enough to withstand talk of trying to carve them up already?
Well, let me say that every bank in the United Kingdom has a taxpayer standing behind them. The taxpayers' investment is over £1 trillion. So the banks are what one of the Monetary Policy Committee members, David Miles, stated when he came before our committee. They are in a life support stage at the moment. So we are all behind them. And in the sense that we have these banks, we nurture them, and then we make them flourish in the high street. That's the aim for it. But don't let's kid ourselves. There's no bank at the moment, in a sense, that's standing on its own 2 feet, because there's so much government money around with quantitative easing, with the printing of money, that they are getting the benefit of this cheap taxpayers' money.
With the measures that we hear tomorrow, RBS we expect to be around 83–84% in state control and taxpayer control. That is an awful lot. I mean, under those circumstances, it normally would be taken off the stock market altogether. Do you think that RBS really has an independent future, given that it is so under the wings of the government now?
Well, I think eventually that it will have that independent future. But later on this week, the Treasury Committee is examining UKFI, United Kingdom Financial Investments, the body that is responsible for the taxpayers' interests. And I've no doubt that question, amongst others, will be coming up when we have our evidence session with them.
Where do you think momentum of this has come from? I mean, is it European regulators? Do we actually have them to thank? And actually, the British government would rather have had this sort of highly anti-competitive playing field just drift along?
I think that Nellie Crowes, the Competition Commissioner, has played a big part in this. But also, in discussions I've had with government, they tell me that they want more competition. And we really need more competition. We're crying out for that. Because if we have insufficient competition, if we do not have channels for non-financial companies to get capital, then the private recovery that we are banking on won't take place. And Adam Posen, a member of the Monetary Policy Committee of the Bank of England, made a speech on those lines last week on it. So we do need that competition.
John McFall MP, the Chairman of the Treasury Select Committee, thank you very much for taking the time out to join us.